Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets of the corporate world, and boy do we have a juicy one today. Get ready because things are about to get interesting. This report we're diving into today is from Ultra Clean Holdings, Incorporated, ticker symbol UCT. It is a current report, meaning something significant happened and they had to tell everyone right away, and we're going to tell you what exactly that is. Now, the very first thing that jumps out is the date. The 23rd of October 2025. This is the date that something important was approved. And what was approved, drumroll please, a share repurchase program. That is right, the company decided it is time to buy back its own stock. And not just a small amount either, they're authorizing themselves to buy back up to a whopping $150 million worth of their own common stock. This buyback plan is set to span 3 years. Now, why would a company do this? Usually it is because management believes their stock is undervalued, or they want to give a boost to the stock price. Or they have excess cash and want to return it to shareholders in a different way than dividends. And speaking of other news, a few days after that board approval, on the 28th of October, they issued a press release announcing financial results for their third fiscal quarter ending the 26th of September 2025. This is crucial because it gives us a peek into how the company is actually performing. We'll get to the numbers soon, but the buyback itself sends a signal. Ultra Clean Holdings Incorporated trades its common stock on the Nasdaq Global Market under the ticker UCT. This means it is a publicly traded company, and these reports are for all of us to see. This section, Other Events, is where they detail that massive share repurchase authorization. They can buy shares in the open market through private deals, or even using special trading plans designed to comply with regulations like Rule 10b5-1. The exact timing and amounts will depend on market conditions, what the law allows, and what the company thinks is best for its business at that moment. It is a pretty flexible plan they've put in place. Now let's get to the meat of it, the financial results. This is usually where the real story is. They announced their third fiscal quarter results on the 28th of October, and this is what they had to say. While the filing doesn't include the full financial tables themselves, it points us to an attached press release, which is Exhibit 99.1. This is where the juicy numbers would be, and it is important to note that this information, as they've stated, shall not be deemed filed for legal purposes. Think of it as them sharing information rather than officially submitting it as part of their core filings, but it is still vital for us to understand their performance. Let's imagine we're looking at that press release, Exhibit 99.1. We know they announced results for the quarter ending the 26th of September 2025. What we are looking for are trends. Did revenue go up or down compared to the same time last year? How about profits? Are they making more money or less? For a company like Ultra Clean Holdings Incorporated, which is involved in manufacturing and providing solutions for the semiconductor industry, their financial health is directly tied to the ups and downs of that very cyclical market. If we were to see a significant drop in revenue, for instance, it might signal that demand for semiconductors is cooling down or that competitors are taking market share. A rise in profits, on the other hand, could mean they've become more efficient or that they're successfully navigating a difficult market. The share buyback we discussed earlier might also be an attempt to signal confidence in their future performance, even if current quarterly results are only so. So they are putting their money where their mouth is, so to speak. Without the actual numbers directly in this filing text, we're relying on the pointer to that press release. If we had it, a key thing to look at would be earnings per S-share or EPs. This is the portion of a company's profit allocated to each outstanding share of common stock. A higher EPs generally indicates greater profitability. We'd also be scrutinizing their revenue growth. Are they expanding their customer base and selling more products or services? We'd also be looking for any information on their debt levels and cash flow. Is the company generating enough cash to cover its expenses and investments, or are they relying heavily on borrowing? Since they are authorizing a $150 million buyback, we'd want to see if they have the cash on hand to do it or if they plan to borrow more. And finally, that last exhibit, the interactive data file, is important for those who want to crunch the numbers themselves or use specialized software. It is essentially a machine-readable version of their financial information, often called XBRL. It allows for automated analysis, which is super handy for institutional investors and financial analysts. But for us, it just means the data is there for the digging. So, what is the story here? Ultra Clean Holdings Incorporated is signaling confidence by authorizing a substantial share buyback program. This suggests management believes their stock is a good investment. Simultaneously, they are reporting their quarterly financial results. which we would need to see to fully understand the context of that buyback. From a broader perspective, the semiconductor industry is known for its volatility. Companies in this space have to be agile, constantly innovating and managing costs effectively. A share buyback can be a smart move if the company truly believes in its long-term value proposition. However, if the underlying performance isn't strong, it can be seen as a way to artificially inflate the stock price without addressing fundamental issues. Looking at the overall picture, we have a company that is actively taking steps to manage its shareholder value through a buyback, while also providing the market with its latest performance figures. The key takeaway is to look beyond the PR and understand the financial engine driving these decisions. Now, my take on this: the share repurchase program is a positive signal indicating the board's confidence in the company's future. However, the true health of Ultra Clean Holdings Incorporated will be revealed in the details of the 28th of October press release. Are they growing? Are they profitable? Are they managing their debt wisely? These are the questions that a large buyback needs to be backed up by solid financial performance. The risks here could be a downturn in the semiconductor market that impacts their revenue, or if they overpay for their own stock. The opportunities lie in their ability to innovate and capture market share in a growing tech landscape. My conclusion is that this is an intriguing move that warrants a closer look at their financial reports. We need to see the sales figures, the profit margins, and how they're managing their cash. Alright, that is our breakdown of Ultra Clean Holdings Incorporated's latest filing. What is your take on these moves, especially the big share buyback? Does it signal strength or something else? Drop your thoughts in the comments below. If this deep dive into corporate filings was valuable to you, please hit that like button. It really helps us out. And don't forget to subscribe for more and for even more exclusive content and discussions. Join our Discord community. The link is in the description. Thanks for watching and we'll see you in the next decode.